China's economic rise is among the most significant shifts in modern history, but it brings with it a big question. Can China ultimately overtake the United States to become the world's largest economy? This analysis explores China's evolving strategy from its shift towards domestic consumption to its robust infrastructure investments and education reforms. While the growth outlook is promising, the road ahead is complex, shaped by potential challenges like geopolitical tensions and demographic shifts. For decades, China's growth was primarily driven by exports, with Western markets fueling its rise as the world's factory. But as growth in these markets slowed, China realized that to sustain long-term growth, it will need to reduce reliance on exports and build a more balanced, consumption-driven economy. This transition is akin to navigating a high-speed train around a sharp corner, requiring careful planning to slow down while recalibrating its direction. China's leadership has focused on transforming its economy to foster internal demand, aiming to build a stronger middle class that can drive domestic consumption. This shift, while necessary, has come with short-term slowdowns and challenges, as reorienting such a massive economy takes time. One of China's key advantages in this economic evolution is its monumental infrastructure. Over the past few decades, the country has built state-of-the-art ports, airports, and technological hubs that support its population of nearly 1.4 billion. These investments are not simply symbols of power, they create a critical economic foundation that enables productivity, connectivity, and resilience in the face of external shocks. For instance, high-speed rail networks enhance regional integration, while advanced ports facilitate trade across Asia and beyond. Such infrastructure not only supports domestic consumption, but also strengthens China's position as a global trade leader. China's focus on building a skilled and educated workforce is another asset that could propel its growth. Chinese students consistently excel in science, technology, engineering, and math, called STEM fields, that are crucial for an innovation-driven economy. Many Chinese students also study abroad, returning with advanced knowledge and experience that enhance productivity at home. The impact of this focus on education is significant, as China develops a workforce equipped for modern industry. Its overall productivity rises. Even if the average productivity of Chinese workers were to reach just a fraction of American workers' output, China's sheer population size could allow it to rival or even surpass the United States economically. China's economic strength is increasingly tied to the broader Asian region, which is experiencing rapid growth and market integration. As Asia's markets become more interconnected, China stands to benefit from regional trade agreements and initiatives like the Belt and Road Initiative. This synergy amplifies China's economic influence, facilitating a flow of goods, services, and investments across borders that bolster its growth. While China's growth story is impressive, several key changes could impact its trajectory. One pressing issue is geopolitical tension, particularly with the United States. Recent trade restrictions, tariffs, and technological bans have added layers of complexity to China's economic relationships. These tensions not only influence trade, but also affect China's strategic plans for technology and industry. Global disruptions such as the COVID-19 pandemic have also exposed vulnerabilities in supply chains and strained economic systems worldwide. Like other nations, China faces the challenge of rebuilding post-pandemic resilience, balancing immediate recovery with long-term growth strategy. Finally, China faces a significant demographic challenge. With a rapidly aging population, maintaining a competitive workforce while managing social welfare demands will require careful policy adjustments. An aging workforce could strain productivity and potentially slow economic growth, which is why China's government has been investing heavily in automation and innovation. Fast forward to present, China's economic growth has slowed to around 5.2% in 2023, a decline from its earlier peak rates. This slowdown could raise concerns, but it also reflects the structural changes required for sustainable growth. Continued investments in infrastructure, education, and technology are building a foundation for long-term resilience even as challenges grow more complex. So will China ultimately surpass the United States as the world's largest economy? While the answer remains open, China's evolving strategy suggests a strong foundation for continued growth. However, geopolitical tensions, global disruptions, and demographic shifts could impact this trajectory, making the outcome far from certain. The coming years will reveal whether China's investment in infrastructure, human capital, and technological innovation will secure its place as a dominant economic power. But regardless of the outcome, one thing is clear: China's economic journey will leave an enduring impact on the world stage. If you found this analysis insightful, remember to like and share this video. And to stay updated with future discussions on global economic trends, subscribe to our channel and ring the notification bell. Thanks for watching.